Good morning and welcome to the webinar on finance solutions for transport and freight businesses. My name is Michelle and I'll be your webinar moderator. Today you will hear from Jackson Miller, Phillips Basile Equipment Finance. As a commercial brokerage firm that specializes in the transport industry, Jackson will share his insights and knowledge to help members navigate their business goals. Like always, we'd like to hear from you during today's presentation. If you have any questions, please feel free to type in your questions in the Q&A section at the bottom of the screen during this session. Today's webinar will be recorded and uploaded to the NatRoad website and YouTube channel. So welcome, Jackson. Over to you.
Good morning, everyone. My name is Jackson Miller. So I'm a finance broker for Phillips Basile Equipment Finance, or PBF. For those who don't know us, we are a bronze partner of the NatRoads Transport Association. As Michelle touched on, our brokerage firm specialises in finance and debt solutions for transport and heavy industries, hence the partnership with NatRoads. So my main aim today is to ensure that all the members actually get something out of this. So I don't want to do a sort of cookie cutter style presentation, tell you information you might already know. And I want to make it relevant for all sizes of businesses, most importantly. So whether you're a owner, driver, general manager of a medium-sized family business, or CFO for an organisation with a large fleet, I think I'll touch on points which will be relevant to you today. Just lastly, before I kick it off, I will be touching my knowledge of the transport sector in the lending space and referring to examples throughout the presentation. So specifically, I've decided I'll be touching on some examples based on the current economic conditions, because it's certainly tough out there for some at the moment, which I'm sure a lot of you could attest to. And I also wanted to reference some recent ATO activity that we've observed in terms of them being more aggressive in times gone by and what to be aware of, and what can be done if you've got that monkey on your back, so to speak. I'll move into the next slide to begin. So just quickly before I go into some tips and observations, just briefly about us. So PBF, PBF are an award-winning finance brokerage firm. So we're one of the leaders in this space in terms of brokering equipment finance deals. We've been recognised as such with awards from all the major bodies and our industry peak body, who's called CAFPA. Specialise in heavy industries, particular road transport. What that means for you is that we understand in depth the challenges transport businesses face, the unique growth dynamics and high capital need to transport companies. So day to day, we deal with transport customers. I understand the pain points you might have dealing with banks and accessing finance, so on and so forth. Look, naturally, we work with several dozen lenders. That includes the major banks, second-tiered lendings and specialised funders. So we spend a lot of time cultivating these relationships and have close ties with all of our key lenders. I think that's important to touch on for you guys. Again, we can get results for your business that in all likelihood, most brokerage firms can't. We spend a lot of time trying to make personal relationships with these lenders to get better outcomes or faster outcomes, so on and so forth. For those of you who aren't 100% sure what a finance broker does, this is, I guess, our three key areas. So equipment finance, that's obviously the main part. So, assets such as trucks, trailers, and industrial equipment, all day, every day. Generally, we can finance anything with a serial number. For example, we regularly fund, aviation assets like aircraft, agricultural equipment, and earth-moving equipment. So again, day to day, I'll have anything on my desk from a new venture purchasing their, first prime mover starting out. Or larger fleet customers who have more sophisticated requirements and large CapEx requirements, so on and so forth. Second thing I wanted to touch on was business and cash flow lending. Business and cash flow lending. It's all important topic at the moment. I guess, given the general economic pressures a lot of small businesses are facing, and again, that increased ATO activity. So we can assist in solving your cash flow problems, which I'll touch on a little bit later in the piece. Again, if you ever have any issues or any questions, feel free to reach out. Again, day in, day out, this is something we see and deal with. Lastly, complex lending. For example, this might be more complex funding requirements such as business acquisitions, restructuring existing debt on your fleet, and commercial property purchases, for example. And I just thought I'd quickly touch on, before I dive into some general tips and insights, why partner with PBF or why partner with a broker firm like us. So industry experience, so we have, in the office, we have decades of banking and finance brokering experience, all of us, with a focus on transport and logistics businesses. So we know that rapid growth and heavy capital investments require specialised knowledge. Tailored solutions, so we provide financing aligned to transport business requirements such as fleet expansion, and facilities to fund your operational expenses such as fuel, subcontractor wages, so on and so forth. So we're across everything from the asset purchase to rolling our sleeves up and assisting with your general day-to-day operational expense requirements. Lastly, award-winning service, as I touched on before. So we've been recognised for excellence in the past, and I hope that gives you guys some confidence in our reliability and our knowledge about the sector. Okay, so this is probably one of the more important slides that I'll touch on. So just some general tips and insights. I feel this is important for, again, a guy who's got 2 trucks to someone who might have 200. I think the simplest tip is early communication. So before you're going to do something, whether it's, buying an asset or buying a commercial property, where possible, it's always good to give us and your other advisors, such as your accountant, a heads up. So what some people don't realise, in most cases, we can actually prepare a finance application without knowing the exact asset or loan purpose and submit for pre-approval. Now, this flushes out any potential issues with the deal early on in the piece, and it gets a lot of the heavy lifting out the way. So I guess in summary, come to us, before you go to purchase a truck, not call us with a tax invoice, needing the money in a couple of days. It generally enables us to come up with better results for you and, avoiding any hiccups with settlement. Following on from the above, so planning ahead. Again, when you're meeting your accountants or doing an insurance review with your insurance broker, I think that's always a good time to think about what your lending requirements will be for the next 6 to 12 months. Getting into the more technical aspects, I find the most challenging thing for transport businesses accessing funding is debt servicing challenges. So essentially that is, does the business on paper, can it support the proposed purchase and its current commitments? The issue we find is that banks and lenders tend to want to look backwards, what you've done in the past. However, a lot of transport businesses are growing quickly. So that causes some challenges. And this is some ways we can get around it or put yourself in a better position. So, for example, we are in November at the moment. So very rarely will a fast-growing transport customer be able to debt service based off his most recent tax returns that are due, which is 2023. So often a lot of, particularly if you're dealing, direct with the bank, often customers will get surprised when they get knocked back often that is because the bank is assessing data which is, 18, 20 months old. It's not an accurate reflection of what the business is currently going to do. Sorry, what the business is currently doing and what it's going to do in the future. So the key here is to provide information that is as recent as possible. They don't need to be finalised tax accounts or anything of that nature. It can be in the form of drafted financials from your accountant. They don't need to be lodged to the ATO. That way, we actually get a look at how the business performed in 2024, for example, not 2023. Even in some cases, your bookkeeper or an in-house staff member can actually provide us with a recent profit and loss from your accounting software from Xero or MYOB. Again, given we're in November now, if your in-house finance person or bookkeeper can provide us with information to the end of September, again, we're providing a better picture, giving you a better chance at approval and getting an ideal loan structure and interest rates, so on and so forth. So overall, if you are growing quickly, we want to demonstrate to the financier how the business is performing now, not what it was doing in 2023, 18 months ago. Another thing I'll touch on, I would say this is potentially for larger CapEx businesses, but it could also be for a small business that you might have recently secured a new contract and you might be doubling in size in the next 6 to 12 months. It's a commonplace. Now again, you might find issues if you are a smaller business or rapidly growing, as I touched on before, trying to fund these purchases based off tax returns from 2023. We might even have issues with recent accounts from 2024, for example. So another thing we can do is a cash flow projection. So this will essentially forecast your next 12 months for your profit and loss, balance sheet, and cash position. So this enables us to show the bank, okay, maybe on current performance or previous performance, they can't debt service this purchase. However, they've got a new contract with Toll, Linfox, or whoever it might be, an abattoir somewhere. This is how much money that this is going to make this is how much money the new contract is going to make for the business. So again, instead of looking backwards, we're showing the lender that we want to look forwards, and we're demonstrating to them that this truck or trailer or whatever it might be is income generating. Oops, next one. So just continue onto the next slide. Onto the next slide. So again, something I'll touch on that I feel that transport businesses' lending requirements are unique, and there are key differences that you guys will face compared to other industries or other types of things like home lending. So again, transport is heavily capital intensive. Equipment's expensive, fuel's expensive, staff are expensive, so on and so forth. So again, a lot of other industries are able to look backwards, use older data, or in cases of home loans, looking at pay slips or previous tax returns. For you guys, yet again, touching on the previous few points, it is important to show the lender what you're going to do in the future and what you've been doing recently, not what was happening in 2023. Another aspect is accountant coordination. Now, for my clients, I will always liaise directly with your accountant, bookkeeper, whoever it might be. So you don't have to worry about collecting and interpreting documents, and I can have the technical conversations with your accountant or bookkeeper or CFO, whoever it might be. So the last item I wanted to touch on here, as I mentioned earlier, is ATO and cash flow. So it's no secret the ATO is not as lenient as it once was. This can pose a large risk to your business if you have large amounts of overdue tax that hasn't been paid. So again, if you are having cash flow issues or there is an overdue ATO debt, please understand that there are lending solutions that can help you out with cash flow or refinancing ATO debt. So please give me a call if there's any cash flow stresses or any issues with the ATO so I can see if we can help. And I'm going to touch on some specific examples of stuff we've done recently so you can see how it might relate to you and your business. Okay, so next, I just wanted to briefly touch on lending for established transport customers. Sorry, I'll come back to that. So I just wanted to touch on some examples for smaller businesses and family-owned transport customers. So I understand that probably 3/4 of the NatRoads members will probably be businesses that have, 1 to 10 or 1 to 20 assets. So here was a recent example from this financial year. So we had a chemical transport business that was referred in. He was a bit of a mess. So he'd been trading for close to 5 years. I would suggest revenue was around $4 million when he came in. So not only were his arrangements were they a mess, he was constantly late paying equipment suppliers because he was relying on low-doc loan facilities. He was running out of lending options. And in some cases, he was actually dishonouring direct debits while waiting on payments from their contractors. Now, as you all probably know, one of the first things a lender will do when you submit is pull a credit file and see what your payment history is like. So this was a massive concern. And I guess in summary, we said to him, look, it doesn't have to be this way. So he had around $1 million of new trailers and used trucks coming up for a new contract that he won. But in his current state, there was just no way known we were going to get that money with his approach he'd had with his previous broker. So I introduced myself to the accountant. We prepared drafted accounts for 2024. So we weren't relying on something from 2023 yet again. We also prepared a cash flow projection based off the new income that would be coming in from his new work source. So this dramatically changed everything. The lender could see that the business was profitable, even though we did have working capital problems. But that was just really a timing from when he was getting paid by his customers. So as a result, we were able to secure an asset finance limit to cover off all of his purchases and a working capital facility to help with his cash flow while he was waiting for lumpy payments. So this removed any of his cash flow stress that he was having. He wasn't bouncing payments anymore. And he had one facility to draw down for all of his purchases. We were able to pay the supplier on time. Trucks were able to get to work on time, so on and so forth. Another recent example, this was actually last month for a tipper business. So does a bit of tipper work and a bit of earth moving work. So he needed $300,000 for a purchase. And again, in a similar element to what I've been banging on the previous emails, he was growing quite quickly. So we bought a lot of equipment last year. So yet again, we've got this issue where the previous year's financials on paper aren't servicing the current and proposed debt because the data is old. In this guy's case, because he had grown so fast, we actually had to get profit and loss and balance sheet just for the first quarter of this financial year, which his in-house financial controller was able to provide. We were able to multiply that by 4 because we'd shown the first 3 months of the year to give the lender a look at what it'll actually look like in the next 12 months. Not to rely on the figures from 2024 because they're irrelevant. This is what it's going to look like for the next 12 months. So in the end, they turned that around, and that was a difference between him being able to make this purchase and him not being able to make it. Wasn't anything too complicated or anything too technical. It was just as simple as showing the lender his current position. Yeah, so I think arguably maybe the most important slide in this, again, given the current economic conditions and behaviour of the ATO, and it's a bit of a flavour of the month at the moment. I just wanted to go through some ATO and working capital solutions. You know, obviously we'd love to just sit here and finance trucks and trailers all day, but we are here to support. We are here to support you guys if there is a cash flow crunch. So this is some recent things. These are the three recent ones, probably in the last 5 to 6 weeks that we've come across. So one was just a simple capital raise against equipment. So this is for a transport customer. He does a lot of port work and he'd incurred a large toll bill from Linkt. He got charged about 100 grand of back payments that they had calculated. He obviously, if he hadn't paid them 100K invoice, it would have killed his cash flow. It probably would have been difficult, if not impossible, for him to continue trading. They were aggressively chasing him for the money. They wouldn't enter into any arrangements or anything of that nature. So what we were able to do, he had a couple of trailers that he owned outright, semi-trailers. So we were able to get a valuation done on these, lend against his trailers, and able to pay out the toll bill with Linkt. So again, in summary, this is something we do all the time, particularly at the moment. That is an option if you need some cash. If you've got unencumbered assets that you don't owe money on or have nearly paid them out, banks will leverage those for you. Debtor or invoice finance, without boring you with the intricacies of what that is, it's essentially selling your invoices that haven't been paid yet to the lender. In this case, we had a customer, he had a really large tax bill, he had about $2.5 million outstanding. So it was pretty serious. Wasn't in an arrangement. ATO were chasing him. I remember I myself was putting things on letterheads, giving them updates, just about on a weekly basis. Now, this guy had limited equity in property, didn't have a hell of a lot of equity in his fleet. So the biggest asset he had in his business, or the biggest asset on his balance sheet, was the money that was owed to him by his customers, his receivables. So we arranged a facility lending against his receivables or against his unpaid invoices to clear his ATO debt and restructure their other funding arrangements. So again, this customer, they had a lot of unrealized equity in their balance sheet that they were able to use that enabled us to solve this problem for them. Now, debtor finance can actually be quite an easy facility for transport businesses to qualify for, just given the burdensome paper trail you guys have. The burdensome paper trail you guys have for proof of delivery, tax invoices, remittances, so on and so forth. It's very easy to track. So I just thought that was a good one. Maybe a lot of people might not realise that is an asset in your business. That is an asset you can leverage. Lastly, just an unsecured business loan, so not tied to anything. So we had a situation where a customer had not one but two, so simultaneous engine rebuilds on some prime movers and a small ATO bill. So he had quite strong cash flows. And the lender was able to provide an unsecured loan to fund the engine rebuilds and clear his ATO debt that he had. This is the last specific one I wanted to touch on. It is a business acquisition. Thought this would be a good point to touch on, so everyone knows of what is available. You might be looking to buy a business. You might be looking to buy your boss out. Alternatively, you might be looking to sell your business, or you might be looking at a sort of some form of a succession plan, and that usually will involve younger staff or family members. Or you might be considering selling altogether. A lot of business acquisitions are stock standard, but what will often be the case is that the incoming purchaser, especially if they're young, are unlikely to have a heap of assets behind them. They probably don't have a heap of equity in property. They might not have a fleet at all, right? If they're buying into a business, or they might not have much equity in their fleet compared to somebody a bit older. So in this situation, just using round numbers, we had a business that was valued at around $5 million. So this included trucks, trailers, and a bit of goodwill involving the renovation of a contract. Now, the issues we had here that the guy who wanted to buy the business, despite being a bit of a transport industry veteran, he was a bit younger. He just didn't have a lot behind him in the way of assets. Had a house, but not a hell of a lot of equity, and certainly not enough that was going to move the needle for a $5 million purchase. I guess the strengths were, again, the general manager was actually working in the business that he wanted to buy. He'd been working in it for 8 years. He knew all the customers. He was de facto running it anyway. So that was a big strength that we could leverage. It's a big strength that we could leverage, and also the seller, he ideally didn't want to put it on the market. He wanted to sell it to his general manager, to his old 2IC. But again, little in the way of assets, and the seller wanted to avoid like a drawn-out vendor finance arrangement. Now, what we were able to do was get a valuation done on the fleet and 12 months projections based on the contracts that was getting renovated to our customer. So 12 months projections for the profit and loss, balance sheet, and cash position. Now, based off our customers' experience in working in the business, the value of the equipment, and what we projected it was going to do in the first 12 months, instead of the bank looking at this, this is a new venture, someone wanting $5 million, they had an understanding. Okay, this guy's been involved in this business for a long time. He really understands it. This is not a run-of-the-mill new venture. So they ended up funding pretty much the whole asking price, and it has ended up being a very successful acquisition. I just thought that might be a good one to touch on. I know Nat Road, we've got a mix of ages. Again, there might be some older guys looking at succession plans and wondering, okay, what options are out there? And I just wouldn't want anyone to rule themselves out because they think that they're young or don't have a heap of assets behind them, that it means they can't buy into a business. So I've got this one muddled up here. We just last thing I sort of wanted to touch on was lending solutions to established transport companies. Transport companies. So I understand that obviously most of this style of customer may have relationships or direct relationships with banks, but don't count us out. We work with a lot of household names in transport, and you might be surprised, I guess, in the variation that's out there, even between the majors. Especially when you're at the bigger end of town, you've got loan structures that are open that aren't open to other people. That might be longer loan terms, big balloons, interest only facilities, that sort of thing for asset purchases. Just things like as well, fleet expansion financing. Now, can't go into absolute specific details, but we have seen it. We have seen examples where a corporate had large CapEx plans. One bank, or their existing bank, told them they could have X amount. We went to another bank, they did a tender. We ended up being able to secure 4, 5, 6 times what their incumbent bank was able to. So it's just something to be wary of, especially if you do have a strong balance sheet, you are highly profitable, to maybe check what's out there. Probably something else, again, might be debt restructuring. Potentially a little bit challenging at the moment, given we're in a high rate environment, but there may be a reason that you want to leverage your balance sheet. Again, it might be acquiring another business or funding some operational expense or something like that. Or project-specific loans. So, financing for a truck yard expansion or adding new logistic hubs. So I guess just the key tips there would be awareness of debt facilities and structuring that is available to you. If you ever want to have a chat, I can walk you through what we've done for other customers or what we might be able to do for you. And again, test the market. I think that's really important, especially for more complex transactions such as acquisitions. Don't just rely on the ANZ banker who you've known for 20 years or rely on CBA because they just happen to be the incumbent banker. If you've got something complex like a business acquisition or debt or finance, do reach out. There might be more variance out there than what you realise. And lastly, look, maximising your balance sheet. Again, if you've got growth plans, maybe working capital isn't what you would like it to be, given reductions in margins and everything recently, fuel costs going up in particular last year. You could have a lot of hidden equity in that balance sheet that we can use or you can use. So just something to bear in mind. So just thought I'd start wrapping everything up. So again, just a summary of some key points, touching on tailored finance solutions. So again, we understand transport is capital intensive. We understand you guys grow really fast. We understand things are expensive. So we can tailor a plan for you. We understand that someone might have told you can't afford it because of your tax returns 18 months ago or 6 months ago. There is ways for us to tailor solutions for you. We do this all day, every day. I understand the challenges you guys face. Understand the challenges you guys face. I can help you overcome them. It's what we do all day, every day. Again, probably the other thing was just dedicated support for every growth stage. I think I've touched on, whether you're a new business wanting to buy his first truck, we can help you out. Or if you're an established transport business, I think we've got solutions for everyone in the market. Again, to use the phrase all day, every day, my next phone call might be with a guy who's got 2 trucks. The following phone call might be with someone who's got 30 prime movers. So we've got a large breadth of appetite for any transport operator, any shape or size. I think I've touched on, enough why partner with us. We've got the expertise. We can tailor solutions for you. We've been recognised by our lenders that we use and our peak bodies. We are one of the leaders out there. If you had any questions or anything of that nature, I'll go on to the next slide, actually, the final one here. So thought we just do a bit of an offer for the NatRoads members. So if you do want to reach out, just advise me that you are a NatRoads member. If you do call or email us or whatever it might be, so I know. So we're happy to do a commercial property health check if you own one. That doesn't necessarily need to be like a NABA 6%, NABA 7%, Westpac 6.6% or something like that. You might be thinking, oh, hang on, I've got a commercial property here worth $4 million, the debt's 1.8. I could use some of that equity to do X, Y, and Z, buy another property or, pump it back into the business, any number of things. So happy to do that. We won't charge you anything. For that, naturally. Like a fleet financing audit. So again, I'm happy to review your current financing arrangements just to ensure you're getting the optimal terms, you're aligned with the right banks. Some banks are a lot better without naming names, some banks are substantially better at funding transport businesses than others. Particularly if you're growing quickly. Happy to make sure that, do you have an asset finance limit in place? What are some other products we can lean on to achieve your growth? And lastly, something I touched on, I guess, maximising your balance sheet. So happy to have a look and understand how you can strategically leverage your balance sheet. If you have any working capital requirements or anything else strategic that you want looked into. So that's it today, guys. If you have any questions, please let me know.
Wonderful. Thank you, Jackson. Thank you for making the time available to talk to us. It's very interesting. We will promote this in the NatRoad newsletter as well. So please share with any other members out there. If you have any questions, please email info@natroad.com.au and we can pass that on to Jackson. But thank you for coming and have a great day.
Thank you.